We mentioned last night that the Amazon daily chart holds a few key channels for us to be aware of as we're going to trade this going forward. And we mentioned this 216 to this 231 channel. And the reason was because the meat of our wedge right here for about, I don't know, about a month and a half, 2 months almost, you had this nice consolidation in here, just this big long channel of just kind of grinding it out right before we actually hit the bottom of that lower channel and then pop back up. So we mentioned this big long area here to be aware of, because if we get a gap and hold up here today, then we could start repeating that process. Well, obviously we got the gap, but we did not get the hold. We had a high low in here about 219 to 208, into the day low at 208.74. So where does that put us? It puts us in this other channel here that we mentioned. We mentioned this 208 to the 216. Now, we also were talking about yesterday that we've only been here a couple times before, right? We only spent a couple days in here, then drop, a couple days in here, then pop. Well, this was basically going on 4 days, kind of just trading within this channel, although we did try to breach it twice for the past 2 days. So what that tells us is, hey, there's volatility, and especially volatility to the upside, but we can't get out of our own way, and we're still dragging it down. Good news about the volatility kicking in even further in here today, because our IV rank was at what? I believe in the upper 30s, low 40s. Now it's at 46. So the good thing about the volatility coming in here at the end of the day today is that it shot our RSI into extremely oversold territory. So this is looking good for us technically, but we still have to kind of see how the whole market's going to react to everything before we start worrying about anything else. But this 208 to the 216 channel, we mentioned it before, in uncharted territory, right? Because this is multiple days that we're in here, not just the two and a get out, two and get out. So we have to see if we're going to continue within this channel, or if we're finally going to breach and then go down and meet this 200 SMA. Again, the 200 SMA and that 200 psychological level is not really what we're worried about. It's going to be the 195 down here. That's going to be your major support. So if we do breach and we head down, we get an $8 pullback. We're going to keep on going down and just look for a bounce off the 195s, not the 200s. But if we do start working our way up and say we get some good volatility coming in tomorrow, right? You got poor PCE, our core PCE data coming out tomorrow. So that could give us some good volatility in here either way, right? So the SPY could be kind of all over the place tomorrow. If we do get a pop in here and a hold, then we could be back in this channel again, the 216 to 231s. But all in all, everything that we mentioned yesterday, the channels and what we're watching supports resistance wise, still all intact, still all in play going forward. And we're just going to see if we can get out of this $8 channel and work our way up to this $15 channel up here. We mentioned volatility kicking in and the IV rank at 46. You got around a $3 expected move priced in by tomorrow, which with, again, the data coming out, that could easily be 2 times expected move in there, whichever way. And you also have a $12 expected move by your March expiration, and then your April expiration, pricing in right around a $16 move. So all in all, again, 208, 216, 216 to 231. Those are the channels that we're looking at. 9-day EMA is going to hold some weight in here as well. Watch out for the 200 SMA as we're working our way down to the 195s. All right, guys, if you like this video, make sure to check us out on all of our social media. We also have a Discord service if you are interested, and you can find all of our socials in the description below.